Hey everyone, thanks for tuning in. Taking a look at our property market, property prices continue to rise in our capital cities, with Sydney already up to 1.7% this month. And looking at year-to-date figures, Sydney is up highest at 4.7% compared with Melbourne, which is already up by 3.4%. With an increase in the number of new listings apparent throughout our capital cities, the next test of resilience for our property market will likely come as auction volumes also increase. With last week's auction clearance rate sitting at a high 88%, recent reporting suggests Sydney's auction market is on track to break a 5-year record. Sydney has now recorded 6 Saturdays in a row where more than 80% of properties scheduled to go to auction have sold under the hammer. Whilst definitely a strong result, auction clearance rates in 2015 were actually stronger, with then auction records showing 20 continuous weeks of above 80% clearance rates, with the exception of Easter, Anzac Day and long weekends. The main difference between then and now is the median house price. Back in June 2015, the median house price was sitting at just about $1 million, and now Sydney's median house price has reached $1.21 million. The median auction price for houses hit a record high of $1.655 million in February, up 9.6% over the year, whilst the median auction prices for units increased 1.2% to $961,000. If the strong level of buying activity continues past the long weekends in April, Sydney may very well break its record. The market has continued to perform strongly, even as the number of properties scheduled for auction has risen from about 400 in early February to almost 685 last weekend. Although the real test will be the last Saturday of March, where there are more than 1,000 homes expected to go under the hammer in Sydney. We are, however, still seeing a 2-speed property market when it comes to unit sales. Apartments in high-rise buildings and apartments that fall into the first home buyer bracket are suggested a harder sell at auction, with buyers seemingly having a mental barrier of paying beyond the first home buyer incentive thresholds. Low interest rates and fewer homes on the market continue to drive the strong buyer demand we are seeing out there, with many buyers in fear of missing out, and record low interest rates are helping property buyers borrow more. But with an average wage earner able to spend $41,000 more at auction than a year ago, as prices rise through, buyers aren't getting as much as their borrowing power. But with prices continuing to rise, analysts expect a possible restriction on lending in the coming months, which could target borrowers with smaller deposits or those with higher levels of debt compared to their income. That's all from us this week, and as always, we have plenty of properties open for inspection and available off market, so if you are needing a home, reach out to us, and I look forward to seeing you out there next time.